What's up, everyone? It's Scotty with MoneyVest. So markets here inching closer and closer to an all-time high with the NASDAQ, S&P, and the Dow Jones all pushing higher once again. They were more or less flat on the day with the NASDAQ here slightly down as we head into the last trading session of 2023. We are now finally almost done with this year, which for me, I wish it would have never ended because it's been one of the best years of my life, not just from a financial, from an investing and business perspective, but also from a lot of different parts of my life. It's been incredible. And maybe that's going to be a video, separate video for members only, where we go over and recap the entire year of 2023 and I share stories and why it was one of the best years of my life. So I really hope and I really wish this was an amazing year for you as well. And 2024, I hope, is nothing but even better, bigger, greater in all aspects of your life, from a financial, spiritual, mental, emotional basis, as well as your professional and purpose-driven basis as well. So, hope you guys enjoy this video, find it helpful. All I'm asking in return is that you drop a like and subscribe to the channel. I would really appreciate that, and links to our Discord and Patreon is going to be down below. There is a 16% annual discount that does expire in 2 days, so after December 31st, so after 2024 begins, that discount is going to go away, so links going to be down below if you want to join, of course, be a part of our MoneyVest community. So Dow Jones here, 37,710, new all-time high. S&P just a little bit under 4,800, and NASDAQ here just under 15,100 on the day. So this right here are some of the targets for the end of 2024. So this is S&P 500 2024 year-end forecast from all these different analysts. Oppenheimer at 5,200, Fundstrat at 5,200. So Tom Lee and Fundstrat were spot on 2023 analysis, which I'll go over in just a minute. Deutsche Bank 5,100, BMO 5,100. Goldman Sachs, RBC, Bank of America, all above 5,000. Barclays, Evercore at 4,800 and 4,750 respectively, which basically means the markets are not going to go anywhere. They're going to stay flat. And Wells Fargo at 4,625, UBS at 4,600, Morgan Stanley at 4,500, and JP Morgan at 4,200 are probably some of the most bearish forecasts going into 2024 as well for the market. So we've definitely seen a lot of potential sort of momentum in 2023. So 2022 was, of course, a huge bear market. Markets were down 25% from all-time highs. 2023 was a huge recovery of that bear market. So all we have seen is just coming back to where we were in the beginning of 2022 towards the end of 2021. So all we have seen so far is a nice V-shaped recovery in 2 years, okay? We went down in 2022, we went back higher in 2023, we're back to where we were, where we started, and now it's all fair game. It's all open game for where 2024 could take us. So, as you guys know, that I don't like making predictions and I don't like making forecasts. Anything is possible. I'd much rather have you guys be prepared for everything, whether there's a recession, whether there's a booming bull market, whether there's raising interest rates, whether there's interest rate cuts. I'd much rather have every one of us in the community be prepared for all scenarios than just focus on one and be prepared for that one. But if anything else happens, we are screwed, right? So I don't want that to happen. So for those reasons, I'd much rather have you guys be prepared for everything that could possibly happen. So that being said, I would still like to present and give my analysis and expectations of next year, given how high the interest rates are, and we are going to potentially start seeing some cuts very soon. The market's now pricing in 6 to as many as 7 cuts going into 2024. So if that actually does happen, obviously the markets are going to kind of see that as a very, very optimistic sign, and that's going to lead to a very nice sort of bull market and even further gains. But I want to remind everyone that the Federal Reserve only cuts interest rates if they have finally either A, accomplished their inflation target, and it's already at 2% or it's on its way down to 2%. Number 2, they see a huge crisis or a recession on the horizon, right? Otherwise, there's no incentive for them to be cutting rates. There's no reason for them to be cutting rates. If unemployment stays low, if jobless claims stays low, and if you're seeing a very strong economic growth, we're seeing very strong labor market, then the Federal Reserve has absolutely zero reason to be looking to cut rates if inflation continues to be elevated or if there's no recession. So if there is an interest rate cut, if they are aggressively cutting rates, chances are that's happening as a result of either crises, recession, or inflation significantly down to their target or worse, even in deflation territory. So when those things happen, that creates some volatility in the market and some uncertainty in the market. So it's possible, again, I'm not making a prediction here, it's only something that I kind of envision. If certain things play out, there's always going to be some probability scales that be like, okay, 60% chance in my opinion that this happens, 30% chance that this happens, and 10% chance that this happens. So I would say that there is a high probability, over a 50% probability, that there is some weakness in the economy going into next year in the first couple quarters of 2024. There is some increase in unemployment, with initial claims also rising. And if that happens, then the Federal Reserve would start to look at cutting rates. But during that time, the market's potentially going to give us a buying window. It's going to give us an opportunity to dollar cost average where the volatility will spike. A lot of technical indicators will be signaling us to deploy cash. We'll be looking at buying opportunities and deals in the market. And once we do that, then of course, when the Federal Reserve starts cutting rates, that's what's going to reverse that cycle for the markets to once again start pushing higher and ripping to potentially new all-time highs. So basically what my expectations are, there's a very high probability that the markets dip in the first maybe couple months or first quarters of the year, give us a nice buying opportunity on the back of maybe a potential mild recession or economic slowdown or a rise in unemployment or some type of deflation. And then when the Federal Reserve starts cutting rates, that's when I expect that recovery to take place. But we got to use that time, that buying window, to deploy cash and dollar cost average into some of the best companies at great prices. And a lot of the analysis with respect to volatility, market breadth, technicals, support, resistance, all that, we're going to compile it and figure out, okay, when is the risk and reward the best? When is the optimal time to be deploying cash and what the risk reward really looks like? So that's where my forecast is. That's where my analysis looks like. And this right here is Tom Lee's expectations of 2023. And he put an end of the year price target of 47.50, which obviously was spot on because we are just a little bit over 47.50. And he says that the U.S. economy remarkably resilient in the face of a rapid Fed hike cycle. The plurality of equity investors expect an inevitable recession as Fed hikes until it breaks something. But if above assessment, falling inflation and end of rate hikes is correct, a soft landing is the highest probability, is what Tom Lee's also talking about based on his 2023 stock market outlook. So what he's saying is that a soft landing is a much higher probability going into 2023, but that was the analysis that he had for this year. But going into next year, he says that the price to earnings expanding in 2024 towards 20 times is what he's expecting. While many argue for valuation compression, since 1937, the highest price to earnings ratio realized when yields were between 3.5% and 5.5%, and when between 4 to 5%, the price to earnings is more than 18 times 65% of the instances. Basically what he means that if yields are between 3.5% and 5% or 5.5%, the price to earnings ratio of the S&P 500 is between 18 and 20. And for that very reason, considering a $260 price of earnings per share for S&P 500, he puts together a 5,200 price target on the S&P, which I believe is going to be another 10% from these levels, or maybe another 15%. 12 to 15% from these levels, considering a 20 times price to earnings multiple. So this right here was the state of the market. Very, very flat day. Energy was definitely selling off on the back of lower oil prices. Tesla pulled back a little bit over 3%. AMD continues to charge higher, up almost another 2%. And again, this right here, the entire market, energy, materials were the two sectors that were definitely selling off quite aggressively, and everything else, utilities, real estate, financials, healthcare, technology, everything else pushing up. And over the last 1 week, of course, we've had all 11 sectors pushing higher, and in the last 1 month, again, all 11 sectors in the green, done really well. Energy is the only one that's kind of struggling a little bit. Sugar prices pushing up very nicely. We had orange juice, lean hog, silver, cattle pulling back, and this right here, Bitcoin a little bit over 42,500, with Ethereum also over 2,300 as well. So when it comes to volatility, we continue to be muted, under 12.5. So basically flat inside this red rectangle. So just got to be careful. We did get a little bit of a spike, a couple days, but going into 2024 in the first month at least, if there is any type of profit taking, if there's any type of de-risking from the tech trade, considering how overcrowded it has been, then it wouldn't be surprising to me if we do see the VIX spike maybe up to 18, 20, 25 levels for the volatility. Going over to Bitcoin, just consolidating sideways in between that range. 44,000 is going to be that resistance, with the support level staying put at 40,000, and a lot of consolidation sideways in between that range for Bitcoin. And of course, Ether also coming up to its resistance. So if you do see a breakout above this 2600 level, next target is going to be 3,500 for Ether moving forward. Crude oil prices once again starting to break down below that resistance area. So we talked about the lower highs and the lower lows and the overall downtrending channel, and right now we are at a support. So this right here is going to be that level to watch, kind of in line with this green rectangle. And if you do see a breakdown further, next support is going to be $67 per barrel, for crude oil moving forward. Talking about S&P 500, and again, we're slowly and steadily kind of drifting upwards very, very nicely for the S&P. And the next target, as we already know, sits at an all-time high of 4,800. We are so close. We are so close. We are less than 40 points away from an all-time high from the S&P 500. So let me know in the comments if tomorrow is going to be that day when the S&P hits a new all-time high. Last trading day of the year. And what do you think? What do you think the markets are going to do? Let me know in the comment section down below. Just a fun little prediction game for last trading day of the year. Can the S&P hit a new all-time high or not? Talking about the NASDAQ, same thing. A very nice move to the upside. It has been on a very good streak of greens. And next resistance at 15,400, which is still about 2.3%. Actually, that's not the all-time high. So all-time high is going to be well over 16,000. So that is still about 7.5%, close to 8% away for the NASDAQ from its all-time highs. It's going to be 16,220 for the NASDAQ. So resistance all the way to 15,400, support level at 14,006 to as low as 14,400 for the NASDAQ as well. So this right here, downtrending channel, lower highs and lower lows, and a very nice breakout to the upside, and resistance all the way to 15,400. And like I said, support at 14,004. Talking a little bit about Apple, and Apple here on the day also slightly pushing up 22 basis points, but a red candle on a green day definitely does suggest there was some selling pressure intraday, and support level is going to stay put at 189, close to $190 per share. So this right here is going to be that level to watch for Apple. Very nice higher highs and higher lows, so very nice consistent uptrend with a resistance staying put at close to 198 and a support level close to 190, all the way down to as low as $180 for Apple. Talking about Amazon, and lots of consolidation for Amazon, so not really going anywhere. So just moving sideways at the moment for Amazon. And support level is going to stay put at $148. So this right here is going to be that level to keep in mind, and a resistance all the way up to 161 for Amazon. So that's going to be that next target. And right now we're kind of in the middle of that range, really just consolidating at the moment, with of course pretty elevated RSI and MACD for both Apple and Amazon as well. Talking about Tesla, and Tesla here selling off a little bit over 3%, so pulling back. We've talked about that resistance and those area of supply at 270 to as low as much as 310, 300s. RSI was also a bit more elevated. It's coming back down, which is a good thing because I did sell calls on Tesla, which are probably going to be up a lot. And if it does end up selling off, the next support really is going to be $240 for Tesla. So that right there is going to be that next level to watch, with the resistance all the way up to $269, $270 for the company. And right now we're within the context of an uptrend, but of course coming up to that resistance and area of supply at the moment. Talking about NVDA here, and NVIDIA on the day, also just consolidating sideways, so not really moving anywhere. Coming up to that resistance, there's not really much for us to go over other than the fact that it's been consolidating sideways in that range between 400 and 500 for quite some time for NVIDIA. And of course, RSI MACD still not quite overbought, but of course, it has been pretty elevated. Look at AMD, look at Advanced Micro Devices. It's been absolutely incredible, $140, very, very overbought RSI and MACD, so ripping higher, and resistance up to 156. That's going to be that level to watch, with the support at close to $130, $131 per share, and a very, very nice move to the upside. And like I said in my previous videos, like AMD is only getting started, folks. I mean, this is a stock that with its AI penetration, it's going to actually do really well, in my opinion, up 125% on a year-to-date basis. And next target and resistance going to be 156 for AMD. Talking a little bit about PayPal, and PayPal here on the day, up over 64 basis points, a very nice consistent higher highs and higher lows, so very good uptrend with a resistance at $65, support level at $56 per share. And of course, it has been in this lower high and lower low pattern, so it's been in this downtrend for quite some time. But of course, now we're starting to see that recovery back up slowly and steadily. It's going to take some time, but it is getting there. And $65 is going to be that next target and resistance with the support at $56 for PayPal. Talking about Visa, and Visa here also on the move up. 260 is where it's at, up over 0.5%, and very nice consistent uptrend of higher highs and higher lows here. Very nice, consistently pushing up to new all-time highs, and support level is going to stay put inside this green rectangle, sitting roughly at 245 and 250 for Visa, with of course a resistance all the way up to as much as 261, 262, pretty much the all-time highs for Visa as well. Talking about Meta platforms, and Meta here continues to move up another 14 basis points, drifting higher slowly and steadily. 361.90, new 52-week high for Meta, just 1 day before the year end. And of course, right now, a bit more on the overbought side. So if it does end up pulling back, don't be surprised. And next support really is going to be inside this green rectangle, much stronger, much better support at 315, 330 for Meta platforms. Talking about Netflix, and Netflix here also slightly down 26 basis points, so mostly consolidating sideways. It's at a support of 485. If it does end up pulling back, 450 is going to be that next level and next support level to watch. And of course, we're looking at a target up to 571 for Netflix at the moment. And for the most part, it's been consolidating sideways in that range at the moment. Talking about Google, and Google here down about 11 basis points, 141 is where it's at. So a little bit of a pullback right now. It's at a resistance, it's at a supply zone right now. So lots of consolidation sideways in that range. So this right here has been the level within which it's been trading. And of course, resistance all the way up here, support all the way down here, 126. And that's pretty much within the range that it's been trading at the moment. Talking a little bit about Microsoft, and Microsoft here on the day also slightly going sideways, 32 basis points in the green. This right here is a very strong support, resistance all the way up to $384, $385 per share for Microsoft, and of course a very nice uptrend of higher highs and higher lows. And like I said, support level is going to stay put at 366 with a resistance up to 384 for Microsoft. And last but not least, we got Costco and Enphase, ENPH, and Enphase here on the day, pushing, I think, slightly up. As soon as this thing loads, we'll take a look. Enphase was slightly down. So it was down a little bit over 62 basis points, but nonetheless, it's coming up to its resistance. It's going to be kind of funny because my call strike is 135. It's just a little bit under 135 right now. And support level right now is going to be staying put at 132. Resistance all the way up to 151. And of course, it's overbought. That's exactly one of the reasons that I'm hedged to the downside with a call strike of 135. So if it does pull back, support level in the low 100s for Enphase. And finally, we got Costco, and Costco here on the day also pulling back, I think, slightly. So, yep, so down about 0.5%, overbought, very, very overbought RSI and MACD. So in my opinion, it's only a matter of time before it starts to pull right back down pretty aggressively. There's some profit taking, could possibly be in the first couple of weeks of 2024. So next support really in the low 600s for Costco. So hope you all enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget, 16% annual discount that's available until the end of this month, which is pretty much the end of the year. And link's going to be down below. So hope you all enjoy it, find it helpful. Make sure that you drop a like, subscribe to the channel. Happy investing. I'll see you all in the next video.